All right, what's going on, guys? So it's Monday, and it's also Valentine Day. So if you're watching this alone, we're the same. I hope you guys are, you know, having a better time than me. But anyway, let's go to news today. Let's go through some of the things because I think Monday right now we don't really have much news. All right, soaring inflation means Britain's face a biggest fall in real income in 30 years. So for people who do not know, the Bank of England have already raised their rates. If I'm not mistaken, they actually raised their rates two times. But I do need to check. So, but things that they, if I'm not mistaken, they will raise their rates two times, and because of the two times of the raise, basically, people kind of see inflation kind of also being quite bad in the UK as well, and because of that, they feel that this might be a trickling fear of what might actually be happening in the US markets after the entire rates hike, which will be happening in March. So I think that that would be kind of the issue. All right, but anyway, over here, you can see that the British household are facing the biggest fall in real income in 30 years as inflation gallops ahead of a wage growth. A stark illustration of the challenge facing central banks as they try to tame prices without snuffing out recoveries from the pandemic. So yeah, apparently yes, they did raise their interest rates twice in the last 3 months, signaling that there will be more to come, which kind of also backs the same question for the U.S. The U.S. Federal Reserve, if we will be also going through the same amount of rate hikes as Bank of England, having the same trajectory of how we'll be going through the entire thing. We have not raised interest rates today because the economy is roaring away. But we face the trade-off between strong inflation and weakening growth. So, for people who know about the entire political side of things, Joe Manchin actually wants Jerome Powell to quickly, just increase all the rate hikes that we need and just get rid of this inflation as fast as we can, even if we have to kind of tank this possible incoming recession. Because if we do not do this as soon as we can, this would actually be detrimental to us in the long run. So, what Joe Manchin basically wants Jerome Powell to kind of just push out would most likely be what we think would maybe be a 50 basis point increment. And also, at the same time, we might also be seeing anywhere from 7 to even 8 increment according to Joe Manchin's trajectory. But of course, right now, we also have people who are very, very dovish on the side of Federal Reserve who thinks that, maybe we only need 3 rate hikes, and these 3 rate hikes can easily just be a 25 basis point increment. And because if we actually do that, then it might actually not be completely terrible as well. So because of that, we're still very, very confused with how it's going to be like. And yeah, I think that, inflation in UK is currently also quite high. If I'm not mistaken, it was somewhere in the 6% region. Expanded 7.5%. I know inflation was 5.4%. Okay, and it went to 7%. I see. Okay, so yeah, so we are expecting it to be about 7% year over year, and if we average it out, it's about 3.75%, which is almost 2 times more than what is actually expected to be of the inflation. But yeah, basically we're just using Bank of England raising of rates as some kind of a foreshadow for how the US will basically be raising their rates. All right, now, second news, it will be the Russian invasion driving oil prices near $100. Okay, so for people who have not checked out my previous video, which I uploaded on Saturday, I actually talked about my own views on the whole Russia invading into Ukraine. Of course, this is considered a market crashing catalyst, of course. And also, later on today, we'll also be having an emergency FEDS meeting, but this is going to be a closed board meeting, so we might not be getting any sort of information on this meeting in particular. But yeah, I think that's going to be somewhat. I don't think it's going to be very, very worrisome. Of course, we never know. I don't think that Jerome Powell is going to suddenly just pull the brake and then just completely stop the taper, and then just so he can raise the rate. I don't think this is what the emergency FEDS meeting is for. But of course, we can never really be too sure, and I think that's kind of the worry we all have. By the way, I think this whole entire Russia versus Ukraine kind of thing, of course, after Jack Sullivan, which is also the spokesperson alongside with Nancy Pelosi, Jen Psaki, alongside with Jen Psaki, actually addressed the entire press conference. I think it was on Friday. They actually talked about how it's possible that Russia is most likely going to be invading Ukraine in the next 2 weeks or so, and they actually want all the American citizens that's in Ukraine to evacuate in the next 24 to 48 hours. Simply because if they actually go more than that, there is a possibility that the Americans army could not really do anything to help evacuate them in the near future, just like how it actually happened in Afghanistan. And that kind of issue kind of worried the stocks market a little bit. And of course, because of that, this news comes out because when war scenario kind of happens, oil prices just generally goes up in price. And because when oil prices goes up, you can kind of just see that the stocks market will kind of tank in general, especially when we have such news with how the Russian invasion is gonna go. Early in the pre-market, basically everything was down. Okay, anything that is not oil is gonna be down. And right now, of course, we are actually getting close to the market open. Right now, it's about 9:07. The market is going to be open in another hour or so. And yeah, I think that the market might actually have this false rally going on right now, even for the Apple, the Google, the Amazon, and such. Right now, they're kind of going up a little bit. Of course, in the pre-market, we actually saw quite a devastating drop immediately from the previous aftermarket price. And of course, that's kind of the reason why I think a lot of people are very, very worried about. Like for Google, we actually dropped from the 2600 all the way down to, from the 2684, it dropped all the way down to 2639. So that is about a $50 drop. And yeah, that's quite concerning. But of course, right now it's kind of coming back up, so I don't think it's going to be that much to worry about. But of course, like I said, could easily just be a short-term fake rally kind of thing, where we might actually see some sort of pullback in the price action, and then we might kind of see more troubles up ahead, especially with this huge news looming in the air. I think that of course, people are of course going to be a little bit more worried. So yeah, a threat of a Russian invasion of Ukraine is shaking up the fragile global oil market, pushing prices closer to $100 a barrel. And of course, I'm not sure the Brent prices right now. Actually, maybe you can just check Brent oil. Brent oil prices. Oh, okay. Can I just check Bloomberg for this? Let's see. That's not it. Yeah, I'm just gonna go on Market Watch. I think I can easily get the. Okay, it's about $93. I think it was quite high up. Yeah, it went up all the way to $95 high, and then kind of went back down a little bit. So that's fine. But anyway, closer to $100 barrel. Haven't topped $100 barrel since 2014. Jumped to an 8-year high on Ukraine's concern on Friday. So concerns about a potential Russian invasion are adding to what has been a volatile stretch for stocks amid concerns about high inflation and rising bond yields. Russia also is a sizable exporter of other commodities, including wheat, which could impact prices in event of military conflict, analysts and consultants says. So, of course, this is what people are really, really concerned about. But, of course, not only just about the commodity side of things, not just about the oil, it's not just about the wheat. Of course, we're also interested in looking at prices, especially in the stocks market, because all this would definitely be correlated to a certain extent. And that's kind of why the main concern is mostly all about. All right, so that aside, okay, inflation is everywhere, including places you might not expect. So I think that this is quite interesting because they are actually talking about more about the CPI in more details. So it's adding legal costs for makers of Marlboro cigarettes, driving up the bill for auto repairs, prompting people to pay less of their credit card balances and stoking concern of shrinking ad spending at social media companies. So for the last part of this, I think this is more concerning to a lot of us who are actually invested in all these companies, be it your Meta platforms, the Snapchat, the Twitter, and such. So all this, when you actually see people shrinking the ad spending, usually it means that the amount of cash burn that a company is willing to go to will be a lot lower. And because of that, such as your Super Bowl ads, people are not really willing to pay as much money for it, which is why I think for the Super Bowl, which LA Rams won, if I saw Bloomberg correctly when I was at the zoo earlier. But yeah, I think because of that, I think for the entire Super Bowl, the advertisement for it, I think it was heavily dominated by the crypto scene and also the aviation scene, which of course people are more excited about the crypto side of things. So I think Coinbase actually took a spot, and of course on the other side of things, which would be aviation, because of course people are getting a little bit more excited that they are able to go overseas and such. So of course those are some things that we're actually more excited about. So while companies have been sounding the alarm on inflation for the past year, economists were mostly playing down the rising prices as a temporary disruption caused by the reopening of the economy. And of course, that was kind of my stance as well, according to what Jay Powell also stated before he retired the term transitory. And yeah, of course, we were expecting it to just be where the economy will eventually open up, and then we will just kind of have this so-called like a V-shaped recovery, and everything is going to be fine and dandy. Of course, this is not what we're actually getting. Of course, with the amount of stimulus that we actually injected into the economy, and right now we're just basically paying for the consequences of it. So yeah, instead of the inflation that has been persisting and recently hit its highest rate in 4 decades, pushing the Federal Reserve to accelerate its plan to raise interest rate. So yeah, to preserve profits, companies are passing along more price increases to customers as inflation shows no signs of slowing down. It kind of cascade from initially a small set of goods to a much larger set of goods. And of course, this actually goes more into just inflation. It's going to go into your shrinkflation, and it's going to go into your stagflation and such. People are going to be giving you less of the product or the less of the service at the same price, and that way you cannot really tell from the CPI. And of course, this way companies will still be able to get as more profits over the year. That's how they actually get a overall revenue growth increment over the years without really having an inflated price increase, and it's not going to be shown on your CPI and all those. So that's kind of the issue as well. By the way, rising prices aren't the main problem with inflation. It's the prices that are rising by different amounts at different times. As some prices rises more than the others, companies and consumers might change their spending plans, something that can affect the economy as a whole. So I think this is more touching towards the point of like how if oil prices kind of goes up, people will start to shift over to the EV side of things, and then that's kind of how we can ease off on the oil side of things, and then maybe oil prices can eventually simmer back down, and people who are interested in getting cars at that point of time, people might just get back into your Ford, get back into your GM, your Chevrolet, and such, instead of going to your Tesla and your Rivian and such. Okay, so yeah, that's something to actually think about as well. And of course, right now, chips, the whole chips manufacturing, of course, they are on a different level of how inflation has been hitting them, including all the supply chain shortages. I think this is like the latest buzzword, especially for the whole of 2021 and also possibly the whole of 2022 as well. So that's gonna change people's mindset around it, and maybe they have to change their spending plans, like they actually says here. So yeah, I think that actually makes a lot of sense. If all prices moved by the same amount, it would also cause for some concern because it would be very neutral. And I think that would also bring the same point, because if you're actually talking about how all the prices basically move at the same time, you're expecting all the food to move at the same time. We cannot really grasp any sort of a supply and demand matrix there, and I think that's going to be even worse for the economy in the long run. So yeah, inflation is also an indication that there's a lot of relative variability in pricing. But yeah, I think this is mostly just talking about inflation in long term. I don't think there's going to be too much to really read up into. A European energy price jump on mounting tension over Ukraine. European natural gas and electricity prices jumped more than 10% as tension over Russia's military buildup near Ukraine entered a potentially decisive week, with the US warning an invasion may be imminent. Okay, so I think on Friday, right after Jake Sullivan told the press conference saying that there is a possibility that Russia is going to be invading Ukraine in the next 2 weeks. I think it was the day after Joe Biden actually came out and just said, we got 130,000 troops ready to fight Russia if that were to be the case. And I'm not sure how to really feel about that, because that's basically a possible foreshadow of how we might actually see World War III. But I think that this war is going to be fought in a very, very different way, in a very, very different manner than what we actually know of what happened in the World War II. But of course, I'm not going to be excited about this. I do not want to talk too much about this. I'm not happy about this. But yeah, that's what's going to be happening. So yeah, the Security Advisor Jake Sullivan said on Friday that it might be happening before the Olympics end in a week. Which, okay, honestly speaking, I don't think that's going to be happening because with how China and Russia kind of have this pact going on, if Russia actually do it before Beijing Olympic, the limelight is going to be shone on the entire invasion instead of the Olympics, and I don't think China is going to be happy about it. I think this is a good time for China to shine, especially with all the things that has been happening. I think this is a good time for China to shine, and I think China wants this as well. So yeah, Russia has repeatedly denied its plans to invade, while Ukraine's foreign minister downplayed tensions over the week, saying there's no pivotal change. Of course, this would be a good thing if that were to be the case. But of course, we do not know what will actually happen. An escalation risk worsening Europe's energy crunch, potentially hitting supplies of gas and oil, raising the specter of blackout. So same thing. This also brings up the first news that I actually covered. No, the second news that I covered. Basically talking about how during this sort of war scenarios, your oil prices, your gas prices usually will be going up in the short term. Aluminum, nickel, and wheat also rose on fears of an escalation. Like I said before as well, commodities in general will be going up in price. Okay, but I think this is just going to be just another journalist talking about it. So nothing interesting about here. Okay, yeah, I was actually reading this earlier, which is the earnings for this week that we have to be looking into, which would be Nvidia, Walmart, Airbnb, Shopify, and Marriott. So let's just check on Nasdaq to see if we have something interesting for us to look at. Today, I don't think we have anything that's super interesting for us to really look at, so I might be able to rest early today, which would be great because I'm very, very tired. Yeah, I don't think it's going to be something interesting. Tomorrow though, we have Alibaba, we have Airbnb, we have Marriott, yeah, we have Roblox. That's going to be interesting as well. We have Viacom. I think that's going to be cool. Viacoms will basically be played as a Netflix slash Disney Plus or streaming giant can play. And let's see, do we have Toast? Okay, Toast is kind of a funny one. I would probably be looking at it, but I'm not going to be relatively ecstatic about it. I'm not invested in the company, which is why I don't really care as much. But I am a little bit interested in the earnings because it was just IPO'd, I would like to say about 5 months ago, 3 months ago ish. So this should probably be its first earnings report. So this should be quite interesting. Wind Resort, I think this is also an interesting play for us to actually look at the hospitality of things. And yeah, Upstart is going to be cool as well. As much as I do not like Upstart, I think Upstart has become somewhat of a momentum-esque kind of stock, which people like to really follow up with. And Upstart do have the tendency to either beat earning like by a landslide or miss it by the landslide, and you can see huge volatility changes. It can go up by 20% or go down by 30%, and we do not know what's going to happen. So that's going to be what you have to fight for. All right, Nvidia going to be on Wednesday, and Cisco System, that's going to be Applied Materials, Shopify, okay, Equinix, Baidu is going to be interesting as well. The Chinese company, Kraft. I think Kraft might give us more insights on the food and beverages side of things. Trade Desk, I think, would help with advertisement insights for us as well. DoorDash, I think, is more on the same line of Uber, where we can kind of see how they are actually performing. And I'm not going to be very, very optimistic about it. But of course, I think they do have a better quarter, which is according to the estimates anyway. So yeah. Yeah, I don't think we have much more. Let's see. On Thursday, Walmart. Yeah, I think Walmart is a very, very big one that we really have to look into. And Palantir. Okay, man, this is gonna be important for me because I have shares, I have options in Palantir, and it will be important for me to really watch this through. So this is gonna be happening on Thursday. So I will probably be putting a remark for myself. Roku is also here. Same thing with a Netflix, Disney Plus esque play. Let's see. Do we have anyone else? Okay, Dropbox is also doing it on Thursday, and yeah, I think that's all for Thursday. let's look at Friday before we just end this off and just call it. Ooh, DraftKings, that's going to be interesting, especially with what I remember seeing an article saying that 100 million Americans are actually doing gambling of some sort. Something along that line. I'm not very sure. And also, we have that's all. Okay, that's great. Yeah, I think that's going to be a very, very interesting earnings week for us to really look into. By the way, I think that's all I have for today. We will probably be looking at the stocks market a little bit just to make sure that everything's fine and dandy before we really want to get into any sort of trading. Of course, right now I'm going to be a lot more apprehensive in my trades because, like I said before, I'm not very sure with how the market is moving, especially with the whole Russia and Ukraine strain on the market as well. I'm not exactly very certain with all my trading moves either. So yeah, I'm gonna be a little bit more cautious this week and also possibly the next week as well. But anyway, I hope you guys enjoy this new session, and I hope to see you guys tomorrow.